Hello, friends. Banks are quietly flagging, freezing, and closing accounts when your money movement looks wrong to their system. If you are 65 or older, this is aimed directly at you. In 1 year, FinCEN reviewed more than $27 billion in reported suspicious activity tied to elder financial exploitation. That is how aggressively the system is watching older Americans' accounts right now. And here is the part that makes it worse. If a suspicious activity report gets filed on your account, the bank is legally prohibited from telling you it exists. One normal cash habit, one pattern the system flags, and the account carrying your Social Security and your bills can freeze without warning. Here is exactly how it happens and what to do about it. Hello, friends. Grab a pen or open the Notes app on your phone. I'm going to walk through 5 things your bank can do to your account when your money movement looks wrong to their system. And on every single one, I will tell you who it hits hardest, what the real numbers are, and exactly what to say to the person on the other end of the phone. Mark the ones that touch your life. Cash at the teller window. Zelle to a family member. One checking account where your Social Security, your pension, and your bills all land in the same place. At least one of these is yours. This is not about telling you to stop using cash. It is about not turning a perfectly normal transaction into a suspicious pattern. I track these rules full-time so you do not have to. Bank agreements update, fraud systems shift, FinCEN rules change, and nobody calls you when the language changes. If you want every update the moment I find it, subscribe now and let's get into it. Now, before I get to the first section, I need to talk to 2 groups of people watching this right now. Group 1 is the comfortable retiree. You have savings, maybe a home sale coming, maybe you sell a vehicle for cash now and then. You think this video is for people who live paycheck to paycheck or people who are making mistakes. It is not. Group 2 is the fixed income retiree. Your Social Security and maybe a small pension land in one checking account, and that account runs your entire household. You assume the bank will warn you before anything serious happens to your money. They will not. Both of those assumptions fail somewhere in this video, and I will tell you on every single section exactly which group it hits hardest. Stay to the end, because the last section is the one nobody explains after the freeze hits. It is the exact sequence that can protect your next Social Security deposit. Let's start. Number 1. The $10,000 line is not the crime. Here is the misconception. People believe that the moment they cross $10,000 in cash at a bank, they have done something wrong. That is not how it works, and that fear is what leads to the real mistake I will cover in the next section. Here is the actual rule. Under the Bank Secrecy Act, any cash transaction over $10,000 in a single business day gets reported to FinCEN, the Financial Crimes Enforcement Network, on something called a currency transaction report. That is routine. The bank files it within 15 days. It does not mean you are under investigation. It does not mean you did anything illegal. It is a form. It happens every single day in every bank in the country. And here is the part people miss. If you make multiple cash transactions in the same day that add up to more than $10,000, those get aggregated. $6,000 in the morning and $5,000 in the afternoon is not 2 small transactions. In the bank system, that is $11,000 in one day, and the report gets filed. Now, the bank can also file a separate report called a SAR, a Suspicious Activity Report. But here's something FinCEN clarified in October 2025. A transaction that is merely at or near the $10,000 threshold does not by itself require a SAR unless the bank has reason to think it was designed to dodge the reporting. And once a SAR is filed, the bank cannot tell you it exists. That is the law. You will not get a letter. You will not get a phone call. The report is confidential. This section helps both groups equally. If you are on a fixed income and you sell a piece of furniture for cash or receive a gift from family, you need to hear this. A legitimate $12,000 deposit is not wrongdoing. And if you are comfortable and thinking about how to handle a larger sum, you need to hear the next part even more. Here is your action step. Before a legitimate large cash deposit or withdrawal, call ahead or walk in and say this: I need to make one legitimate cash transaction of this amount, and I do not want to split it up. Tell me exactly what ID or paperwork you need from me today. One natural documented transaction. That is all. That is number one. The $10,000 line is routine reporting, not automatic trouble. So now you know the first lie. Over $10,000 is not the crime. The next part is the mistake that turns a legal transaction into a suspicious one. Number two, the real mistake: structuring. Here is the misconception. Smaller chunks look safer. You sell a truck for $12,000 cash, and somebody tells you to bring in $6,000 one week and $6,000 the next, so you stay under the line. That advice can land you in federal trouble. Deliberately breaking up cash deposits or withdrawals to stay under the reporting threshold is called structuring. It is a violation of the Bank Secrecy Act, and it does not matter that the underlying money is legal. The act of splitting it up to avoid the report is the problem. Here are the numbers, and I want you to hear them clearly. FinCEN's own customer pamphlet says structuring can mean up to 5 years in prison and a fine of up to $250,000. And if the structuring involves more than $100,000 in a 12-month period, or if it happens alongside another violation of law, the penalty doubles. This is not about a teller being picky. This is federal. And when a bank sees transactions of at least $5,000 that it suspects involve evasion of reporting rules or have no apparent lawful purpose, it is required to file a suspicious activity report. That means the bank is already watching before you hit the number you are trying to avoid. This section hits the comfortable retiree hardest. You are the one most likely to have a vehicle sale, an estate cleanout, jewelry proceeds, a contractor payment, or a safe at home with cash you want to move into the banking system. And you are the one most likely to hear bad advice about breaking it into pieces. Let me tell you about someone who learned this the hard way. A viewer wrote to me about a man named Leonard, 72 years old, outside Columbus, Ohio, retired contractor. He sold an old pickup and some equipment for $12,400 cash. He thought he was being smart. He brought in $6,200 one day and $6,200 a few days later. He was not being smart. He was creating exactly the pattern the bank system is built to detect. 2 deposits, same account, same week, both just under the line. The fix was simple. He stopped splitting. He brought the bill of sale and his photo ID. He made one natural deposit with a documented source of funds, $12,400. One transaction. No suspicion. Here is your action step. Do not break up cash transactions to stay under $10,000. Keep the paper trail. Bill of sale, invoice, estate documents, receipts. Walk in and say this: this cash came from this source. Here is the paperwork, and I want to handle it as one normal transaction. That is number 2. And that was the warm-up. Because your bank does not need a broken law to decide your account is now a problem. Number 3. It is the pattern, not just the number. Now, everything I have covered so far sounds like it lives at the teller window. It does not. The number is not the real story. The pattern is. I need you to hear this one carefully because this changes what you are watching. Here is the misconception. If you stay away from $10,000, you are invisible. You are not. Banks do not need a single magic number to restrict your account. They have broad authority sitting in the deposit agreement you signed when you opened the account, and that agreement gives them room you would not believe. Chase says on its security page that if it spots suspicious activity, it may place a temporary hold on the account. The Chase Deposit Account Agreement, the version effective March 15, 2026, says it may close the account. Bank of America's deposit agreement says it may delay, decline, cancel, or reverse transactions and freeze some or all funds if it reasonably believes the account may be subject to irregular, unauthorized, fraudulent, or illegal activity. Wells Fargo says it may close your account at any time, and if it suspects suspicious, irregular, or unauthorized activity, it may prevent, delay, or decline transactions and freeze funds until the concern is resolved. That is not one bank. That is the three largest banks in the country, and the language is sitting in public deposit agreements right now. This section hits the fixed income retiree hardest. Because when one checking account carries your Social Security, your pension, your utility payments, and your rent or mortgage, a freeze does not just inconvenience you, it stops your household. That one account can be carrying $2,071 a month on average. That is the Social Security Administration's average retired worker benefit for January 2026. Multiply that out. That is $24,852 a year. Over 5 years, that is more than $124,000 moving through one choke point. And if the bank decides the pattern on that account looks wrong, every dollar of it can stop. Here is your action step. If the bank restricts your account, do not wait. Call and ask one question with 3 parts. I need to know whether this is a fraud hold, a deposit hold, or a closure, what documents you need from me today, and whether my next direct deposit will be accepted. That one call can tell you whether you are dealing with a temporary review or a permanent problem. That is number 3. And once you understand that the bank is watching pattern, not just amount, the digital version of the same mistake makes a lot more sense. Number 4. The digital and small business version. Here is the misconception. Zelle is just family money, and the business ownership questions went away. Neither one is completely true. Start with Zelle. Chase, Wells Fargo, and Bank of America all say the same thing in their terms. Zelle is for sending money to people you know and trust. That sounds like common sense, but it is also a legal boundary. The Wells Fargo Zelle addendum says money sent through Zelle may be delayed or blocked to prevent fraud or comply with regulatory requirements. It also says the bank may decline or cancel payment instructions and may suspend or terminate the Zelle service without prior notice. Read that last part again. Without prior notice. That means your Monday morning transfer to your daughter can be stopped on Monday morning, and you may not find out until the money does not arrive. This is not automatic. The app does not warn you that repeated payment behavior may be getting reviewed. It just stops working when the bank decides it should. This section hits the comfortable retiree hardest. You are the one most likely to use Zelle regularly, to help adult children, to pay a handyman, to split costs with a friend. And the more frequently you send, the more data the bank has to decide whether the pattern fits or does not fit. Now, the business ownership side. If you have heard about beneficial ownership information reporting, here is the update most people missed. As of March 26, 2025, all United States created entities are exempt from filing BOI reports with FinCEN. For most U.S. seniors with a domestic LLC or small business, that filing fear is gone. But there are 2 caveats. First, if you have a covered foreign entity registered to do business in the United States after that date, the filing window is 30 calendar days from the date registration becomes effective. Second, even though the FinCEN filing went away for domestic companies, your bank may still ask beneficial owner questions when you open an entity account. That is because of separate federal customer due diligence rules, and FinCEN eased how often banks have to repeat that collection in February 2026. But the initial ask at account opening is still there. Here is your action step. Use Zelle only with people you know and trust. If a payment gets blocked, call the bank's digital fraud line and ask whether the payment is being held for fraud review. And if you have an LLC or entity account, ask your business banker one question. What ownership information do you still need from me under your current due diligence rules? That one question clears the air before the bank comes asking on its own terms. That is number 4. All of that matters. But when the restriction has already landed, what matters is what you do in the first call. Number 5. What to do if the account is frozen or closed. This is the section I told you to stay for. And I need to slow down here because what happens in the first 24 hours after a freeze can determine whether your next deposit lands safely or disappears into a locked account. Here is the misconception. You will wait for the bank's letter. You will not. Because by the time a letter arrives, your next direct deposit may have already bounced or been swallowed into a restricted account. The average retired worker's Social Security benefit is $2,071 a month. That is $24,852 a year. Over 10 years, that is nearly $250,000. Every one of those deposits needs somewhere to land. Let me tell you about someone in the comments who asked what to do when the freeze has already happened. Her name is Diane, 76 years old, Macon, Georgia, retired school secretary. Her main checking account was restricted after unusual activity, and the only thing on her mind was her next Social Security deposit. She did not wait. She called the bank fraud line the same day. She asked one question: is this a fraud hold, a deposit hold, or a closure? She found out it was a temporary restriction. She opened a backup account at a different bank that same week. And she contacted Social Security to redirect her direct deposit before the next cycle hit. That sequence saved her. Not because it was complicated, because it was fast. Here is what protects you by law. Under Regulation E, if an unauthorized electronic transfer shows up on your statement, you have 60 days from the date the bank sends that statement to report it. Miss that window, and your liability for later unauthorized transfers can grow. Once you report, the bank must investigate within 10 business days, or it can take up to 45 days if it provisionally credits your account while the investigation continues. Those are real clocks, not suggestions. The government does not knock on your door and hand you those deadlines. The bank does not volunteer them. You have to know them walking in. Here is your action step, and this is the most important one in the entire video. Call the bank the same day. Not tomorrow, not Monday, the same day. Use these numbers. Chase, 1-800-935-9935. Option 8 for personal checking and savings fraud, or 1-800-9788-664. Option 1 for debit card fraud. Bank of America, 8004-321-000. Wells Fargo, 1-8008-693557 for personal checking and savings, or 1-866-867-5568 for bill pay, Zelle, and online transfer fraud. And use these exact words. I am documenting this call. Tell me whether this is a fraud hold, a deposit hold, or a closure. What documents you need from me today, and whether my next Social Security deposit needs to be redirected right now. If the bank stalls or does not resolve it, file a complaint with the Consumer Financial Protection Bureau. Most companies provide a response within 15 days through that process. And if you suspect someone else moved your money, call the National Elder Fraud Hotline at 1-833-337-28311. That is number 5. So here is the full picture. The $10,000 line that is routine reporting, not automatic wrongdoing. One natural documented transaction instead of 2 suspicious ones. The split deposits that can turn a legal sale into suspected structuring, with penalties up to $250,000 and 5 years. The pattern that can matter more than the amount, because your bank's own agreement gives it the power to hold, freeze, or close without a single law being broken. The Zelle and entity account wrinkle that people assume the bank is not watching. And the recovery sequence that protects the next deposit when the hold has already landed, starting with one same-day phone call. The government does not call and explain what a currency transaction report is. The bank does not have to tell you a suspicious activity report exists. The app does not warn you that repeated payment behavior may be getting reviewed. The business banker does not assume you know beneficial ownership rules changed in 2025 and customer due diligence changed again in 2026. And the next deposit does not wait for you to sort it out. Being allowed to use your money and keeping uninterrupted access to it are two different things. The gap between them is knowing the rules before the bank acts. I want you to think of one person right now: a parent, a widowed neighbor, a brother-in-law who still uses cash for everything, a friend from church who sends money to family on Zelle every week. Send them this video. Not because they are careless, because one normal transaction handled the wrong way can make legal money look suspicious, and nobody is going to walk them through the fix until the freeze has already hit. Subscribe, share this with someone you love who is over 65 and still trust that the bank will explain the rules before it acts, and I'll see you in the next one.